It is not uncommon to see hundreds of stores closing down on the streets of major companies in the United States. In this video, we will briefly tell you and analyze why giants like Amazon, Microsoft, Disney, Victoria's Secret, and others, which we will relate throughout this interesting report, are closing from 60 to more than 500 of their stores, and what is the next step for their employees and customers. Analysts have predicted that the United States will lose up to 50,000 stores in the next 5 years. Since April 2022, Amazon has been closing its 66 non-food stores in the U.S. This will include all the company's bookstores, as well as its 4-stars and pop-up stores. Apparently, the company will focus on launching its style clothing stores, as well as boosting its line of grocery stores. Microsoft enjoyed a big boost in profits thanks to the coronavirus pandemic, as millions of people became dependent on its software for their work and virtual school setups. However, that hasn't stopped the tech giant from reducing its in-person retail offerings, and the company announced in June 2020 that all of its stores, including 70 in the U.S., would close permanently. All sales moved online, while Microsoft Experience Centers, where customers can try out products, remain in former stores in London, New York, Sydney, and the company's Redmond campus in Washington. Disney has had a mission to close most of its stores in North America for some time. A total of 119 stores closed in recent years, leaving only 23 in the U.S. However, over 100 new small Disney stores opened in Target stores across the country in 2021 as part of a growing trend of smaller concession-style stores appearing in large retail outlets. The lingerie and clothing giant Victoria's Secret announced in May 2020 that it would close 250 sites, a quarter of its stores in the U.S. and Canada. By the end of 2020, it had closed 248 stores. Parent company L Brands warned that this could be just the beginning of closures in the coming years, and it wasn't long before another announcement revealed plans to close 30 to 50 more stores in the US and Canada. Now, the future of the 1,050 Victoria's Secret stores based in North America has been left in the balance as employees and customers wait to see which locations will close next. Gap, which also owns the alternative clothing brand Banana Republic, announced in August 2020 that it would close more than 225 stores that year, with more closures revealed in 2021. The number of Gap stores in the U.S. was already in decline, and brutal sales figures as a result of COVID-19 restrictions only worsened the situation. The company saw a 95% increase in online sales in 2020, which served to offset some of the damage caused by empty stores. In February 2021, Gap announced it would spend $140 million building a warehouse in Texas capable of processing 1 million packages per day to meet additional demand. GameStop, the electronics retailer, became a sensation in the stock market and the media in early 2021, when retail investors began buying shares in an orchestrated move to strike at hedge funds, betting on the chain's continued demise. While GameStop enjoyed extraordinary growth in its stock price, it still faces a very uncertain future and has closed over 550 stores in the U.S. Best Buy, the electronics retailer, has been quietly closing stores over the past few years, closing 20 locations in both 2019 and 2020. In early 2021, it announced plans to close even more this year. While the total number of store closures is not available, it is likely that at least 60 Best Buy stores have closed so far. However, in November 2021, the company revealed that it was opening new experimental outlet stores in Charlotte, North Carolina. In not only economic terms, we find ourselves in the adaptive era, and giants are putting their efforts into revising the new and overwhelming wave of virtuality as their main market source, and having enormous stores become experiential or focused on the niche markets that have shown the most growth in the virtual world, setting up a new retail footprint strategy aligned with changing customer needs, as stated by a spokesperson for CVS. The pharmacy chain, which has increased the number of store closures to 900. American Eagle Outfitters, which has closed up to 250 stores, established plans to improve profitability, including doubling Aerie brand revenue to $2 billion by 2023 and increasing sales in its American Eagle stores. To achieve its goals, the company is closing between 200 and 250 of its stores, most of which are in shopping centers, while increasing its Aerie brand from 350 stores to between 500 and 600 by 2023. The conclusion that these stories of big companies leave us with is that the focus on adaptation must be paramount, and that we must establish ourselves in web interaction beyond simple browsing. The optimal combination to lead companies to their maximization of benefits always has a constraint, in this case based on the closure of physical stores, focusing on virtual distribution and routing their financial muscles to the strengthening of their strategies and modality for this virtual market, and with it, the dismissal of their team dedicated to physical stores. Before the coronavirus outbreak, Macy's had already committed to closing 125 of its locations over the next 3 years in an announcement made in February 2020. Along with the closures, the department store giant said that 2,000 jobs would be eliminated to increase profits. Some of those stores have been converted into logistics centers to keep up with the increase in online sales, which grew 53% year-over-year in the second quarter of 2020, and then at a slower pace of 27% in the third quarter. At the beginning of 2022, Macy's announced that it will close another 6 stores in Alabama, California, Colorado, Missouri, and Texas. Big companies, to avoid taxes and other costs associated with physical stores, are closing their purely commercial spaces and formulating their physical stores as experiential spaces. This leads to the conclusion that the most optimal solution, also for employees of these physical stores and all people dedicated to conventional in-person jobs that have disappeared, is to move to the virtual realm and find a space in the vast universe of online jobs that are increasingly in demand due to all this business movement towards the strengthening of their virtual gears. In conclusion, the retail industry has experienced significant changes in recent years, especially with the increasing adoption of e-commerce and the COVID-19 pandemic. Many large retailers, such as Best Buy, CVS, American Eagle Outfitters, and Macy's, have been forced to adapt their business strategies to remain competitive in the changing retail landscape. This has resulted in the closure of many physical stores and the shifting of focus towards online sales and virtual experiences. The trend towards virtualization is likely to continue, and as a result, there will likely be an increasing demand for jobs in the online space. Therefore, individuals who have been affected by the closure of physical stores and traditional jobs should consider exploring opportunities in the digital realm.